On October 10, 2025, the cryptocurrency market went through the largest liquidation in history.
Last Friday, you could see the big drop-off.
Over $19 billion vanished in just 24 hours. Bitcoin crashed from $122,000 to $110,000, and altcoins lost up to 70% of their value. But what really caused it? Officially, it all began with politics. The US announced new 100% tariffs on Chinese tech imports, which sparked panic among investors. This announcement sent shockwaves through global markets, with the Nasdaq 100 dropping 3.49%, the S&P 500 falling 2.71%, and the Dow Jones Industrial Average declining 1.9%. And Bitcoin mirrored this panic, dropping nearly 3.93%. But geopolitics alone doesn't explain the speed and scale of the crash. The crypto market was dangerously overheated. Traders were using 50 to 100 times leverage. Even a small price drop forced massive liquidations. Everyone rushed to sell, crashing prices and sparking panic. But liquidations actually started before the tariff news, hinting at something more than coincidence. A key factor in the crash was a glitch in Binance's price feed called an oracle. One of its dollar-pegged tokens, USDE, suddenly dropped to $0.65, but only on Binance, while it stayed $1 elsewhere. This triggered forced sales of linked assets like WBETH and BNSOL, as traders' accounts appeared to lose value instantly. A chain reaction of liquidations across exchanges, spiraling billions of dollars out of the market. A single system error became a full-blown crash. The crash exposed weaknesses: heavy reliance on centralized oracles, interconnected platforms, and high leverage made the system fragile. Risk management was inadequate, letting a single shock ripple through the market like a domino effect. But in the middle of it all, large market participants known as whales capitalized on the chaos. And spoiler, their payday was massive. On platforms like Hyperliquid, a decentralized exchange, a trader opened a massive short position just minutes before the tariff announcement, netting $192 million in profit. This strategic move raises questions about the possibility of market manipulation, as the timing and scale of such trades suggest a level of foresight and influence over market movements. Over time, that position exploded, $735 million in BTC shorts, and another $380 million in ETH shorts. On-chain analysts started digging, and what they found wasn't just a wallet, it was a cluster, linked by Ethereum name service tags like erigenis.eth. These wallets seemed connected. According to investigators like Ion Chain, the clusters showed clear ties to Garrett Jin, the former CEO of Bitforex. The numbers are staggering. The cluster controls an estimated 46,295 BTC. That's about $5.2 billion at the time, spread across synchronized addresses that all move together with the Trade Before Crash wallet group. Jin, for his part, denies everything, saying the funds belong to clients and that he only runs nodes and provides insights. The shorts, the increases, the exits, all aligned almost exactly with the geopolitical shock. One report even claims the whale added 200 BTC to the short just 1 minute before the announcement went public. And when you zoom out, it gets even deeper. The same wallet cluster had been rotating assets months before. Using the Beacon deposit contract, they turned massive ETH transfers into staked funds, split into 32 ETH validators, which appear inactive and effectively hide their movements from casual trackers. So let's connect the dots. $1 billion short position. Coordinated wallet activity. Perfect geopolitical timing. And a name that keeps surfacing. Garrett Jin. Whether it was Jin, his clients, or someone even higher up, it doesn't matter. The message is clear.
If the Lord Almighty came down and said, Joe, get out of the race, I get out of the race, the Lord Almighty's not coming down.
Geopolitics isn't just shaping the markets anymore. It is the market. Welcome to the new playbook. Make the chaos, then bet on it. Despite the chaos, the market rebounded quickly. Total crypto capitalization fell over the weekend, but recovered shortly after. Volatility is brutal, but crypto adapts fast. If you found this breakdown useful, like, subscribe, and tell us in the comments, was this crash planned or just coincidence?